Let's focus on another big winner this year. Maharashtra Seamless is up more than 180% in this year. The company recently won an order of around 180 crores from ONGC. Mr. Saket Jindal, the managing director of the company, joins us on the show. Hi, Mr. Jindal. Good morning, and thanks so much for joining in. Well, tell us, what is the updated order book post this order win? The last number we have is around 1,450 crore rupees. So what does it go to?
So it's at similar value right now. So we're looking for more orders, and in the export, in the domestic sector, in oil sector. So currently it's a little sluggish, but it's expected to pick up soon. And we're talking to customers in USA and Canada to immediately book some new orders.
Okay, all right. Got that. For this year, though, Mr. Jindal, could you tell us what is the target in terms of the EBITDA per ton and for both your segments, that's ERW as well as Seamless, both on volumes as well as on the EBITDA per ton front?
Right, the EBITDA per ton, approximate 20,000 rupees per ton we are projecting, a little more than what it is now currently. So the demand outlook is positive, although currently it's a little sluggish, but the infrastructure demand in India is strong. And also oil and gas, the rig count in USA, Canada.
Mr. Jindal, just to get that EBITDA per ton number out of the way, Seamless was around 25,000, while ERW was around 5,000. So on both these two, you want to give us the guidance on the EBITDA per ton from year on?
So I think we should be able to maintain what it was recently. We should be able to maintain, and little bit up and down depending on market conditions.
Okay, so EBITDA per ton at similar levels. And what about volume growth for Seamless and ERW?
Volume growth would be, I think the last year we did in Seamless more than 3 lakh tons. So we're targeting 4 lakh tons this year, provided the variables remain intact.
Okay. Nigel has focused a lot on the business. So I want to talk a little more about the other, the things on the side, right? So promoter holding for one, balance sheet for the other. On the promoter holding front, your promoter holding standing a little bit under 68% right now. Any plans to take it up further?
Creeping acquisition we can do, but otherwise it's expected to be stable, more or less stable.
Okay, more or less stable around 68%, got it. And any update on the balance sheet? You have cash on your books right now, I think a little under 1,300 crores. What do you plan to do with that? Any expansion plans that you're looking at?
We are looking for opportunities to invest. We already took over one unit in Hyderabad, which was a seamless pipe unit. And we want to maintain our core competence, and a related industry only we are focusing on. So like cold drawn pipe project, and also premium connections, and also alloy steel pipes. So these are some value-added products we're looking at, and also maybe coating facilities for like cement coating, which is also a requirement in the large dia pipes.
So, Mr. Jindal, you're looking at inorganic growth with this cash balance besides your capex plans. Is that correct?
That's right.
And by when can we hear about this? And what could the ticket size be? 100, 200, 300 crores? What could it be?
No clear figure right now. It all depends on what we are able to bag, means the opportunity, what is available. But we would maximize our investments from our current liquidity into these only. Like utilization would be here.
Should we hear something by the end of this year, this fiscal, that is, before the end of March? Should we hear something in terms of inorganic growth? Because your balance sheet is looking good.
Not so soon. I think it will take some time, I think.
Okay. And what about your rig business? That's the smallest part of your business, but that has been turning around. What's the plans out there? I think in the past, the street is expecting maybe to go ahead and sell it.
The day rates have increased in the rig business. So in a group company also, we bagged orders in ONGC. And our contract in MSL is valid for another year or so. So after a year, we'll have to renew the contract.
But will you look to sell this business? This rig business is a very small part of your business. So just trying to ask you, have you thought of that?
No plans as of now. We are continuing currently. In the future, depends on the scenario, market scenario.
Okay, I wanted one, thought from your end on the export business, because I think 60% of your order book comes from exports. Any
Right.
pickup there, any sluggishness, and how are the export markets looking?
Export we are doing mainly to USA and Canada, and there we expect the demand to be robust with the rig count and the oil prices maintaining. So, although recently there was some sluggishness, it is expected to be strong again, I think by early next year.
And any change in your contribution that exports will have? I mean, will it continue to remain at 60% of your order book, or do you plan to grow it further?
No, export, we are trying to increase the export, and we are trying to get orders from, like in Saudi Aramco, there are some projects of LNT which we are also aiming at.
Okay. And exports as a percentage of your revenues is 30% approximately. Of your order book, it's higher. But
Yeah.
as a percentage of your
30%.
revenues, it's what? 30%.
30%.
And since we are getting into a general election here in India, in the run-up to a general election, do orders, start getting a little bit muted? Do you see a reduced ordering, or how does the trend behave in the past?
I think it doesn't affect much. It remains intact.
Okay. Got it. All right, Mr. Jindal, thanks so much for joining in. You've given us a fair sense in terms of business and the business going ahead as well. It's been a good year for your shareholders, so we wish you well. But I think quite a few times in this conversation, you use the word sluggish. So we'll have to see how things move from here on as well, though the stock has done pretty well.